Recording in progress.
Namaste to all. I welcome you all on this very important discussion through this webcast on PLI on textiles, uh, going forward to build a self-reliant India, organized by the Committee on MSME and Startup of ICI. Being the first year of this committee, the committee is thoroughly into the process to make available various schemes, knowledge, and various activities which can be done through the MSMEs and the startups. So this is a topic today which will be taken, and we have got our own chairman, CA Dheeraj Khandelwal from Mumbai. I welcome him for uh, joining this for organizing this webcast and joining and making this all possible because he's the chairman, the first chairman of this committee, who has done a remarkable job to uh, bring this whole committee to the status it is today right now here, having a whole not only the certificate course on MSME as well as startup, two separate, and having completed so many batches thereof, and also having a separate portal for both MSME and the startup. So the dissemination of the knowledge on MSME and startup both have been done fantastically by this committee. And in that process itself today is that this session, which is very again important, that how we can see what is that PLI and how it can be benefited, how members can be benefited, and how they can take this forward to inform their clients that, okay, in the textile sector, you can have this benefit of the scheme of the PLI. I request my chairman, CA Dheeraj Khandelwal, to please give his opening comments.
Thank you, Primo sir. And as rightly briefed by you, that this committee is definitely doing wonderful job for MSME in startup. And this is also one of the series on the various knowledge dissemination on the various subsidies, various schemes, various government schemes are part of it. And in the last budget, the government has came out 13 sectors PLI schemes. This is one of the sector of the textile which is there. The cabinet has approved in the September month about the PLI schemes on the textile. And this schemes, which I can say it's one of the prominent reason being for the textile, it's going to give a lot of employment opportunities for this sector, and government having in this particular schemes about more than 10,000 crore rupees a outlay on this textile sector. And I can say it's India is largely the textile sector, whether it's Ganji or whether it's Surat or whether various number of parts of the country is part of the textile, and Make in India concept where the textile is also a leading part of it in the manufacturing and Make in India concept. And I believe that this sector is growing very fast, and it's been since long to are in the forte. And this scheme been launched in September, and it's been available from the 1st January to the 31st January, and already is 5 days left, and is important those are who are not applied for it, and that's why we thought it let's 5 days is being left, and those sectors and those chartered accountants been involved with the various audit and taxation and other capabilities to the textile sector. Let's go to the your people, your client, and apply that for the PLI scheme. Don't miss it, and that's why we wanted to brief them. This is also professional opportunities for the member, and we have the technical people over there, and rightly we have the Mesh Poddar. He's hailing from Ganji, which is a textile hub of the in the Maharashtra. Same way we have a lot of people, and he's practicing chartered accountant for last 20 years, having professional insolvency course, and as well as the system auditor, and he's having the command in the subject, and he's also doing a lot of tough subsidy part for the textile sector, and he's one of the capable person who can guide us on the PLI schemes on the textile sector. And I believe this is important. Those who left out, and still the industry has not applied for PLI scheme, and they should apply it. And the online forms are available, and they can fill up the form, and let's understand things from the Msme. And I'm sure about it. After this session, you will must be knowing about the how to apply and how to do it. And whatever the questions you have in mind, you can raise up, and the Msme will surely will address to you all this in the PLI. And we have a lot of other PLI schemes also, which is still there, like engineering product tech project is also there. Electronic will surely come out immediately a webinar on the electronic project also. So all will going to cover up the most of the things have been covered up. Those schemes are available in the PLI. Now it's this schemes and production based link in the other sectors is still going on. We are Institute is part of it. The committee is part of it, and we'll work on it. So with this, I welcome each and everyone for this conference, and I request to each and everyone to take the benefit of this MSMEs schemes. And we have the CFO's outsourcing program, we have the CXO outsourcing program, we have the portal msme.ici.org, where the myself and Pramodji has took the lead role to have come out the MSME, where we came out a subsidy schemes of 12 states, and which is available on the portal, and comparative chart is there. So I request go through it, and any suggestions on this, please write us to them on any comment or any suggestions to Pramodji and myself. We'll surely look into it and improve whatever the best way can do it. So with this, thank you very much, and straightforward. I request Pramodji either you can brief the Mahesh Poddar. I think Mahesh is a very known figure in the HR Ganji and in the textile market. So I request Mahesh to take forward the session.
Thank you, Director.
Your video is not there.
Yeah, I pause it. I will be sharing the PPT.
Okay.
Yes. Hello, sir. Okay. I will start with the screen sharing. Okay. Good afternoon, everybody. Now let's start with our technical session. It's regarding production linked incentive scheme for textiles. This was put up before the industry for their deliberation in the month of September to November. And later on in the December, the final GR was released by the government for implementation of the scheme. Recently, as Dheeraj sir rightly pointed out, in the last budget, government came out with 13 sectors for implementation of the PLI scheme. Various engineering, electronics, and textiles industrial and IT sectors were included for making investment or for providing the incentives under the production link incentive scheme. This is sectors to increase. This is specifically for increasing the innovation and productivity and supporting the Make in India initiative of the government. In the chain of said schemes, the government came out with the scheme for textile sector. Within textile sector, we are having different products, and being a production link incentive scheme, they have specifically put up that the scheme will be available for the industry only in the man-made fiber sector and the technical textile sector. Even there, they have listed out the products which will be eligible for the scheme, and the list of products has been put up in the GR, which I have mentioned over here. And the list is HSN based, so you can consult your client along with the HSN codes which they are producing, whether they should be able to get incentive in this scheme or not. Paradigm shift in the method of incentive. Till now, almost all the incentive schemes which were implemented either by the central government or various state governments were either capital investment based, wherein you were getting a percentage of the capital invested as refund, or there were interest incentives, reimbursements, rebates provided, or there were recently GST reimbursement schemes, or there were tax holiday periods provided to various industry while implementing the project. However, this new chain of scheme implemented is production linked. Thus, the scheme ensures that the project comes up, it is implemented, as well as it is developing a sustained capacity creation along with capacity utilization. So, no dead projects will be allowed to claim incentive under this scheme. The project has to compulsory come out with the production for getting the incentives or claiming the incentives. Achievement of predefined stages of production is essential to claim the incentives under this set of schemes. If the stages are not achieved, then the applicant will not be able to get the incentives. Now, before consulting the client in obtaining the subsidy, first it is our duty to understand what is man-made fiber and what is technical textiles. So I have taken up a brief note on definition of both these products. Man-made fibers are mainly of two types, namely synthetic and cellulosic. Synthetic fibers are produced from crude oil and cellulosic fibers are produced from wood pulp. While understanding this, the main varieties of synthetic staple fiber are polyester, acrylic, and polypropylene, whereas cellulosic fiber are viscose fiber, modal, etc. Textiles made out of these synthetic and cellulose fibers are called as man-made fibers. The cotton is a natural growing raw material from which we produce the fabric, whereas both these types are derived fibers and not a direct growing raw material. Most interestingly, we should note that the intention of the government is to utilize the in-house capacity available in our country. India is the second largest manufacturer of MMF. So if we are promoting this industry, then the whole of the capacity will be utilized within the country itself. Next is technical textiles, which is the most value adding as well as profit generating sector in the textile industry. Technical textiles are defined as textile materials and products manufactured primarily for their technical performance and functional properties rather than aesthetic and decorative characteristics. Some examples of technical textiles are bulletproof jackets, parachute fabrics, non-woven wipes, etc. इससे हमें समझ में आता है कि जनरली जो फाइबर की इनहेरेंट कैपेसिटी रहती है, इनहेरेंट क्वालिटीज रहती है, रादर देन द शो लाइक हम लोग ड्रेस पहनते हैं, शर्ट्स वगैरह जो या फिर हम लोग कर्टन्स, अपहोल्स्ट्री, होम टेक्सटाइल्स यूज करते हैं, those are not part of technical. They don't utilize the technical value of the fabric. Whereas these products, this sector of the textile industry is specifically utilizing the inherent capacity of the fabric or fibers, and therefore it is known as technical textiles. It is not in the regular form of manufacturing. Now let's come to the scheme. Application procedure. First of all, any person can apply under the scheme. It's not necessary it should be a company or a trust or an individual or an NGO, nothing. Anybody can apply. And although as Dheeraj pointed out, we are already late in taking our discussion over here. Application has to be made during the month of January 2022 only, from 1st of January to 31st of January. So you can consult, if you are having the high capacity clients, you can consult them to come and register under the scheme. Even now we are having 7 days to get ready for applying under the scheme. While applying, you will have to pay a non-refundable application fees of 50,000. This is to de-promote the useless applications being uploaded just for phishing and not for an actual intended application. While making application, we have to be ready with the proposed annual investment plan, expected sales turnover that we are going to achieve, and expected employment generation which we are going to provide. So in short, we should be ready with the project report, how the project report will be, how the project will be financed, how it will be implemented, and what will be the outcome. And those figures have to be specifically put up while making the application for the PLI scheme. Proposed location of setup of the units under the scheme also has to be declared. There are various areas categorized under the scheme according to which you have to apply, and there are restrictions if after an application is approved by the ministry, if you want to change your target area, then you will have to just compulsorily go to the lower side of category, and you cannot upgrade your location for the purpose of implementation of the project. So your locations should be properly identified while making the application. The URL of this portal where we have to make application has been mentioned by me over here. Now, what is the scheme? Approved units will be provided cash incentives as a percentage of turnover and incremental turnover achieved over a period of 5 years. While going through the further, we will understand what are the definitions of this subject of these terms. The scheme is specifically divided into categories. First is application with minimum projected investment of 300 crores. Second is applications with minimum project investment of 100 crores. This investment will be calculated excluding land and administrative building cost. One important point to note is that this investment need not be at a single place. It can be divided over various cities, over various states in the country in the viable size of the project. But all of this investment has to be made within the gestation period or the period as I will be explaining while going ahead in the PPT. Now we have to understand what are the conditions to be fulfilled while making applications under the scheme. Once after you are making the application, the ministry will go through all the applications received and then they will issue the approval letter. The ministry has put up a cap of 10,000 crores for initial as an initial fund for providing incentives under the scheme. If there are not sufficient applications available, they may extend the period of the scheme, or if the industry comes out with some request, even then the period of application may get extended. This has to be monitored by us if we want to consult our clients who are unable to make application within the provided time. Now, a new company, after the approval is received by the applicant, they will have to compulsorily form a new company for making the investment. First 2 years will be considered as gestation period. So when approximately your applications will be approved in the month of March 2022, period 22-23 and 23-24. They have specifically given these 2 years as gestation. It is not that we are making application in January, your application is approved in the month of April, May, June. This investment and application and approval procedure is very time bound as given in the government resolution. Unless and until extended, this will be working as per the provided timeline. For both the categories of the applications, the scheme envisages that a minimum turnover of twice the investment. It is if you are going for rupees 300 crores investment category, then you will have to achieve a turnover of 600 crores in the first performance year. And in case you are going in the 100 crore category, then you will have to achieve a 200 crore rupees minimum turnover in the first performance year. So now what is first performance year? It is the first year after the finish of the 2 gestation period years. So year 24-25 will be the first performance year where this performance will have to be presented. If this target is not achieved, then incentive for that year will lapse. After this first performance year, there should be a minimum increment of 25% in the turnover over the previous year for being eligible for the incentive. The incentive is going to be calculated on the percentage as a percentage of the turnover. So maximum investment increment to be eligible for incentive is 35%. So even if the applicant manages to achieve a turnover increment of 45%, he will be eligible for getting the incentive only on the additional 35 additional 10% and not the additional 20% he has made. So even if 45% increment is there, he will be getting subsidy only on 35% of the turnover. Investment target can be achieved till gestation period is over or in the first performance year. But target turnover has to be achieved for the first performance year itself. So suppose that in the next year you are making an investment of 50 CR. In financial year 23-24, you make an investment of further 25 CR. So you will be short by 25 CR for implementing in the 100 CR category. So you will be eligible to make remaining 25 CR investment in the financial year 24-25. However, you will have to achieve the target in that year itself, being the first performance year. So although you can stretch your investment for first 3 years, but the turnover has to be achieved in the third year of commencement. Further, there is one more condition which has to be fulfilled. There should be minimum value addition as prescribed in the owned factory premises. So, my friends, this is one more very important condition. Sometimes the applicants or the industry may feel that we can establish only one portion of the chain and remaining things we can get outsourced from outside vendors, and thereby keeping the investment limited, they can increase their turnover. However, this scheme demoralizes such investments. They want that minimum value addition means 60% value addition should be done in the own factory premises for integrated or fiber yarn to fabric or fabric to garment category on technical textiles. However, for independent fabric processing industry like dyeing and printing, the required minimum value addition is 30% because here we are taking the already ready fabrics and we are just increasing the luster or the quality of the fabrics by putting on some chemicals which cannot make a value addition of more than 30%. So this laxity has been provided only for fabric processing industry. Further, trading and job work turnovers will not be accounted for. So only if you are purchasing fabric and selling fabric, which is an approved product in your sanction letter, that will not be counted as your turnover. Turnover will only be counted where you are converting by purchasing the raw material, utilizing your industry's machinery, and then finishing the product and selling it out in the market or to the next business or utilizer of the product. Again, if your industry is working on job work basis for manufacturing from any third party master weaver or master supplier, you will not, the said turnover of job work will not be eligible for considering for calculating the incentive. Further, turnover of only registered product will be eligible for incentive and turnover calculation. So if you are say registered for the non-woven wipes, So you will not be allowed to manufacture fiber, or your turnover for selling directly fiber will not be counted for the purpose of the achieved turnover or for the purpose of getting the incentive. Now, how the incentive will be calculated? Net incremental sales within cap of notified products, excluding taxes. So here we should understand that taxes, the turnover which will be utilized everywhere, or the figure which will be utilized everywhere, will be excluding GST. We multiplied by the rate of incentive in percentage for the performance year. This incentive will change every year, and depending upon the incentive will change every year because they have provided various percentages to be achieved every year. Now we will go towards the examples of calculation of incentive. We have seen that there are two categories for implementation of the project. First category is 100 crore investment project. So let's try to understand how this incentive will be calculated. First performance year, you will have to achieve twice the amount of investment, that is 200 crore turnover. Now there are various incentive slabs available. Starting from the first performance year, first year you will be eligible for an incentive of 11%. Second year you will be eligible for an incentive of 10%. Third year you will be eligible for an incentive of 9%. Fourth year you will be eligible for an incentive of 8%. And fifth year you will be eligible for an incentive of 7%. Now we will come to understand what is how the incremental turnover will be calculated. So suppose in first year we are making an investment of 200 turnover of 200 CR. So you will be eligible to get an incentive of 11% on 200 CR, which will come to 22 CR amount, which is a very sizable amount available to the entity. Now in the next year, this incentive will be decreased to 10%. Now next year you are achieving a turnover of 250 crores, but you will be eligible for getting incentive only on the 50 crores, which is the incremental turnover. So the whole turnover in the second performance year will not be eligible for the incentive, only the incremental value will be eligible. Now here we had discussed earlier that if more than 25% achievement is done in a turnover, suppose rather than 250 CR, we are able to achieve a turnover of 70 crores, increment of 75 crores. It will come to 275 crores. However, there is an upper cap of 35% increment. So 200 into 35%, which comes to 70 CR. So even if your turnover will be 275 crores and differential turnover will be 75 crores, you will be eligible only for incentive only on the 70 crores amount, which is the higher cap of 35%. On that incremental turnover, the incentive will be 10%. Now, as we go to third year, the incremental of 25% comes to 62, and so on. In the fifth year, 7%. So total, considering that incremental minimum threshold is achieved by the applicant every year, then he will be eligible for a total amount of subsidy of 45.71 CR against an investment of 100 CR. So the total incentive comes to 45%, which is a very sizable amount. Almost the 70% of the bank loan amount which the project will be raising will be repaid through this capital investment subsidy. Now, there is different slab for the purpose of calculation of incentive for 300 crore project. For 300 crore project, the turnover you will have to achieve is 600 CR in the first performance year. Now the slabs will be 15%, 14%, 13%, 12%, and 11%. Remaining calculation method will be same as for 100 CR project. Now subsidy amount is comes to 195.73 crores in a period of 5 years. So it will be around 65% of the total project cost. If we see that general banking principles for this size of projects, banks finance 66% to 100% of the project cost. So within a period of 2 years gestation plus 5 performance years, so within a period of 7 years, all of your principal loan amount is already being paid through this scheme. So promoter will be at ease to make the investments towards increment of the turnover and betterment of the quality development of the project or the production facilities. Now, before going ahead, we will now go through the GR to understand some nitty-gritties of the scheme. Just a minute. We have gone through the original objectives, definitions, applicant means any person. So as we have discussed, any person will be able to. Here, auditor certificate. These certificates will be necessary for claiming any incentives or for claiming the benefits under this scheme. Chartered accountant will have to certify considering the documents very carefully whether the required value addition and the required turnover has been achieved by the entity. Then manufacturing has been defined over here. In accordance with the GST, they are defining the manufacturing word, and accordingly manufacturing is necessary for getting incentive under this scheme. Performance year. Here, this performance year word we can see in that section 2.21 is the most important section for achieving for understanding the implementation of the scheme. First performance year is financial year 24-25 as already informed by me, and so on. These performance years are the years where the required turnovers have to be achieved for obtaining the incentive under the scheme. Here, we should understand the minimum incremental turnover concept. It is means a 25% incremental turnover as already covered by me in my slide. Immediate preceding year from performance year to onwards in the subsequent year. Now the value addition formula. Minimum value addition. For the purpose of this scheme, minimum value addition is 60%. So if we consider this value addition formula, product sale value declared in GST invoice excluding GST, sale value minus purchase value divided by purchase value. So whatever value increase over and above the purchase value of the raw material will be considered as value addition done by the unit, and it has to be 60% in cases other than the fabric processing industry. Here again, definition of turnover has been given. So while certifying the turnovers for the unit, while making the application, we should carefully read this definition while certifying that. So this is a detailed chart given by the ministry itself, wherein we can understand how the period of implementation is being bifurcated. Gestation period, financial year 22-23, because once the approvals are provided in the March 2022, the unit has to start implementing the project. 2023-24 is optionally gestation period. If the unit is capable of generating the requisite turnover in this year itself, they can start claiming the incentive from second year itself. In case of fast-paced investment plan, threshold investment and turnover is achieved in financial 2024. Incentive may be payable in financial 24-25 itself. However, in such cases, benefit of the scheme shall be available up to financial year 27-28 only. That is a total 5 years only. So even if you are now maximum cap of investment. Here the criteria of 30%, which I was explaining while through the slides. Here the 35% turnover increment in the turnover is the maximum available cap for the incentive. Even if 45%, 50% increment is achieved from the base year, this will not be applicable, eligible for getting calculating the amount of incentive. Notify products sold under GST invoice indicating 8-digit HSN code. This is again an important criteria. The GST invoices which you will be raising should be having the 8-digit HS codes so that they can clearly identify whether the project or the products are from the eligible category and whether they are eligible for getting the subsidy. One more important point is 7.11. Generally, what happens is the government doesn't allow you to claim incentives under various different schemes. Only subsidy can be claimed only from a single scheme. However, here it specifically says participants are eligible to apply for other applicable schemes administered by the government of India or the state governments. For example, duty remission, duty exemption, duty drawback, etc. However, various other states are or various being this subsidy along with the incentives available from the states, the entities can obtain around 70 to 80% capital incentives, which is very, very huge for an entity coming up in the textile sector. The whole of the efforts of the entrepreneur has to move towards achieving the requisite turnover so he remains eligible in the scheme. The applicant in its group companies should neither have declared as bankrupt or defaulter or reported any fraud by any bank or financial institution. So the applicant should have a clean record while making application under the scheme. The government will be conducting a sample test check on a sample basis the accounts and cost audit of the companies who are making investment under the scheme. Now they have given a clear-cut sanctioning criteria on the basis of which units will be selected for the scheme. While making the applications, the applicant has to be cautious whether he is fulfilling all the criteria so as to be eligible under the scheme. Here the financial capacity of the applicant, relevant experience, location of the manufacturing activity, everything has got a point to be eligible under the scheme. Category A, B, and C, and investment in aspirational districts and category C, highest points are being provided for category C and aspirational districts. This marking will help in prioritize if more applications are received than the funds available. Again, part 1 or part 2, this will decide how much points. If you are in making investment more than the threshold limits, you will be getting more subsidies. Having more points for being eligible under the scheme. Further, the amount of employment which the applicant will be generating will also be a point to understand, a point of consideration for gradation, which will help them in getting approval for the scheme. Further, if you are investing in integrated weaving and processing of fabric, so in the textile chain, generally you are eligible. You can implement a single project or you can implement the whole cycle within your premises, which helps in more value addition than the independent units. So government is grading accordingly and providing that investment in integrated weaving and processing of fabrics to garment units. They will be providing more mass than the independent units coming up. Now, change in location. Why we should finalize the locations, tentatively finalize the areas for implementation of the project is made clear over here. Change in location from category A will be allowed to category B or C An applicant in category B will be allowed to change to category C only. So you can only downgrade your location once your project has been improved. You cannot you cannot upgrade your location. So once you have finalized in Pune, you can only go to these states or these cities. But once you have finalized in Lucknow, you cannot have your project in Pune. You have to go the other cities and the thrust sectors. Now the definitions and conditions have been provided. What will be considered as plant and machinery? What will be considered as investment in other facilities for the purpose of the definition? Only land and administrative building will be excluded, and all other investments will be accepted for the purpose of calculation of the investment threshold. Time schedule has been provided as 1st January to 31st January on online portal. No application will be accepted. However, in case of insufficient number of eligible applications, the application window will be reopened. So if a new notifications comes, then we will definitely be able to reapply under the scheme. So we will be able to apply in the scheme even after the due date. Now this is the scrutiny procedures given. Opening, last date of raising query, last date for compliance. So within this period, you have to comply if any queries have been received from the Ministry of Textiles while scrutinizing the scheme, while scrutinizing the application. Remaining things have been covered in the slides. They have provided the whole procedure for disbursing the subsidies, how the applications have to be made, and how those will be disbursed by the Government of India. The participants, this is an important point considering our profession. The participants shall furnish the following certificate from chartered engineer. Chartered engineer. It is about chartered engineers, not chartered accountants. My mistake. Sorry. Therefore, turnover criteria and value addition has to be certified by the chartered accountant. Now, the scheme itself covers the whole of the list of products which can be manufactured under the scheme for making the project, for making the industry eligible for the scheme. While making application, you have to take care that only these products are listed, or the machinery or the manufacturing unit manufacturing these products are being applied for this subsidy. A full exhaustive list has been provided, and a search is available on the basis of HSN codes. Now the scheme itself provides, the GR itself provides various examples of calculation of the incentives. These are various areas where you are able to achieve the turnover or you are not able to achieve the turnover. All the scenarios have been covered. As the applicant to plead that I am unable to understand the thing, everything has been explained clearly, and the incentive will be sanctioned on the basis of the GR itself. Now I will summarize the whole scheme. The scheme looks promising for development of the thrust areas of textiles. For technical textiles, government is making efforts from last around 20 years so that the industry grows. However, the industry has got a limited market and the technology is very niche, and India is still to take up development in the technology. Most of the technology is available with the European markets, and with this scheme, government targets that technology will come to India and manufacturing will be taken up in India. This will incentivize a large capital intensive projects. What happens in all this type of projects? Generally in technical textiles, after implementing the project, you have to wait for around 6 months to 1 year for approval of your products by the various buyers of your product. Generally, like if you are making bulletproof jackets, it has to go to army for approval. If you are making some non-woven products, that has to be approved by various industries before they start utilizing your product. This takes a period of 6 months to 1 year. So after your start of production, you will be around, you can say you will be, the industry will be silent for 6 months to 1 year unless you can go for your commercial production. So the government has given a gestation window where your products can be approved by the specific buyers, and those buyers, after approval, they will give you the orders, and then your industry will flourish in a very good manner. Technical textile is one of the highest margin paying industry sector, the highest paying sector in the textile industry. However, due to non-availability of marketing strategy, the industry is slow in picking up in our country. Once the capital investment is incentivized, this will give assurance to the investors that okay, if we take a year for implementation of the project and achievement of the turnover, we will be incentivized by the government, and thus they will be ready to take risk and invest in this project. However, this is my personal opinion that achievement of turnover as twice of the project cost is not easy in textile industry, and the industry and the entrepreneurs will have to work hard to reach the same in the given 2 years gestation period. But once achieved, this will definitely help India in achieving the Make in India objective and take India to the podium position in the textile industry. Here, I have completed the whole scheme. I think some more discussions will help, or the queries will help us in pointing out if any other points have to be covered. Sandeep sir, over to you. The scheme under PPT is complete. Sandeep sir?
You just check it your WhatsApp so that you will get the questions.
Yes, sir. Yes, sir. I will await questions from your side. Oh, great. There are so many questions. So now the session will be a good interactive. Overall global business size, if the respective products cover technology and plant supplies, economic size investment, and ROCE, existing players in this area, if you can cover these aspects, definitely be very purposeful to build India a great place. Regards. So, I will just point out from my personal experience, whatever experience I have and whatever knowledge I have. I cannot say that I am an expert in the whole textile industry, but if we consider the technical textiles, which has been a favorite subject of mine for last so many years, but due to the limited market, what happens? MSMEs are frightened to go in technical textiles due to the gestation period. जो time हमको marketing के लिए लगता है और market setup के लिए लगता है, वो बहुत ज्यादा है, और उस पीरियड में MSMEs limited finance की वजह से उसको achieve नहीं कर पाती है. But once you are able to obtain the right technology from the right person, from European, Japanese, or the German companies, or if you are able to set up a good R&D lab at your own place, along with that industry, R&D has been considered as a eligible investment under this project. अगर अच्छा R&D किया जाए तो एक या दो यूनिट भी काफी बड़ा मार्केट कवर कर सकते हैं. आज बहुत सारी चीजें टेक्निकल टेक्सटाइल्स की इंपोर्ट की जाती है, और या फिर जो पॉलिस्टर या यान जो बनता है वो सब बाहर जाके उस पे आगे के वैल्यू एडिशन एक्टिविटीज होके वही चीज इंडिया में वापस से आती है. आज आप शूज ले लीजिए, वो भी टेक्निकल टेक्सटाइल का प्रोडक्ट्स है जिसके लिए मैनमेड फाइबर्स को भी यूटिलाइज किया जाता है. अम्ब्रेलास है, बहुत सारे प्रोडक्ट्स है, पैराशूट्स है, जो बाहर की कंट्री से मैन्युफैक्चर होकर आते हैं, जो बाहर की कंट्री से मैन्युफैक्चर होकर आते हैं और इंडिया में उनको असेंबल किया जाता है. Once we are able to achieve this benefit, achieve in-house capacity or country capacity within the country, if the large units come up, छोटे units का भी capacity generate होगा कि हम लोग या मार्केट एक बार जब बनने लग जाता है एक कंट्री में, वंस हब स्टार्ट्स डेवलपमेंट, तो छोटे यूनिट्स को भी इस प्रोजेक्ट में जाने के लिए काफी प्रमोशन मिलता है. And then once 100 crores and 300 crores projects are there, small units will start coming up who will cater to these units, and thus the whole gamut of the industry, या फिर जो हम क्लस्टर अप्रोच बोलते हैं, उस बड़े इंडस्ट्री के आजू बाजू में छोटे 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 एमएसएमई इंडस्ट्रीज और आ जाएंगे जो इन कंपनीज को सप्लाई करेंगे और ये कंपनीज बाहर भेजेंगे. आज होम टेक्सटाइल्स में भी इंडिया में 3 या 4 ही बड़े कंपनीज है, लेकिन छोटे छोटे हजारों एसएमई यूनिट्स के पास से वो लोग मैन्युफैक्चर करवा के ले रहे हैं और आज इंटरनेशनल मार्केट में इंडिया का कपड़ा बेचा जा रहा है. उसी तरीके से अगर टेक्निकल टेक्सटाइल्स में भी कुछ बड़े प्रोजेक्ट्स आ जाएं जो एक बार अपना खुद का मार्केट सेट करके फिर छोटे छोटे एमएसएमई यूनिट से परचेस करके बेचे, तो दैट विल बी ब्रेक थ्रू फॉर इंडिया in the technical textiles and the MMF sector. Is it mandatory to register for MSME? What are the? It is mandatory for register for MSME. Okay, this is not the subject, but I can put up my reply for this. MSME को अगर MSME के benefits लेना है, तो yes, it is must for registration. MSME registration compulsory कहीं नहीं है, मगर जो benefits है, जैसे आज MSME समाधान के benefits है, या फिर आप पोल्यूशन का परमिशन लेने जाएंगे, या फिर आपको अगर आपका अदर गवर्नमेंट्स के बेनिफिट लेने होते हैं, आपका पेमेंट का गारंटी लेना होता है, उन सभी की.
सर इंग्लिश में.
ओके ओके, आई विल गो थ्रू इंग्लिश. ओके, इट इज MSME is not a mandatory procedure, but it helps us in getting most of the incentives which are available for the MSMEs. Unless you register, you will not be recognized an MSME unit, and you won't be able to file any cases or get any benefits from any banking industry or financial institution or any other courts. Like the MSME Samadhan is one of the biggest benefit I see for getting registered under MSME. That is secondary, the banking are providing 0.5 to 1% rebate under the to the MSMEs in the financing. So for that, compulsory you have to get registered as MSME. So I've covered first and second question. I think what are the main advantage, disadvantage? There is no disadvantage as such of registration of MSME. There are only advantages. Till now in my practice, I have not seen any disadvantage of getting registered as MSME. Please define a trade-off going for natural. I am unable to understand this question. Please define the trade-off going for natural. Anybody who has asked this question can please elaborate on this. I am unable to understand the question. How to establish a new startup in textile industry with the ever-emerging brands and in highly competitive world. See, marketing a textile industry is totally depend upon how you approach your customers. Manufacturing in textile industry is not anything which is very complicated. It is very easy to understand and easy to manufacture. It is second largest employment generating industry, so it is labor intensive. All of your efforts have to be towards training of your staff and marketing. For marketing, you have to approach, if you are making the finished products, you have to find out where are the markets. You have to push your products. You have to provide presentations. You have to prove its capability and utility. Unless it is proved, there will no, it is same for each and every product. So if you want to implement ever emerging brands are there. Establishment of brand in textile industry is not very easy unless you are able to capture the online portals like Amazon and Flipkart, or you are able to sell your products on those such portals. It's very difficult for in textile industry to create a new brand. It takes a huge time. You have to make your presence available in all the retail chains. You have to provide marketing. But selling your products to brand is much more easier. Generally, the study which I have made for the textile industry in India, most of the manufacturers are not marketers or brand owners, and most of the brand owners are not own manufacturers. Mostly brand owners provide a specific set of manufacturing instructions, and they get it manufactured from job workers, or they buy it readily by providing specifications. So selling your products directly to the customers is job of the brand, and you can sell to the brands at your initial stage. Once you set up your startup in textile industry, once you start manufacturing, then you can first initially manufacture for the brands, set up yourself, start getting profits, and then out of those profits, you can start investing in the brands, investing in your own marketing. Any chance of extension of last date to file application under scheme? See, I am unable to have any data from the ministry as on today. You cannot, these are all internal documents. After 31st of January, only we will be able to know how much applications have been received, how much have been rejected. Once the later 20 days period is over, then the ministry will come up, okay, this so many applications have been received and so many applications have been rejected. And they will provide that this fund is available. They have given a period of 6 years for the scheme from 2022 to 2028, or sorry, I think it's till 2030. So it means that once they see success for these 3 to 4 years, they will again come up with funds for this scheme. So considering the GR में लिखा है कि till 30 we will be implementing this scheme, but the incentive period is getting over in 2025 itself, 27 itself. So we can be sure that there will be more windows coming up in the scheme. But extension, as of today, there is no visibility. Which are the banks financing startup projects without collateral? What is the limit? The insurer risk of such finance. Sir, there are all the banks finance under the startup schemes, but it again depends upon your credibility. And I have seen that this is very subjective. It depends upon every city whether the bank will be accepting the startup projects or the new textile projects. In textile, there are no much scope of being classified as startup because everything is already being done in the country from last hundreds of years. उसका स्टार्टअप का डेफिनेशन है कि देयर शुड बी न्यू टेक्नोलॉजी, न्यू वे ऑफ डूइंग एनीथिंग. बट टेक्सटाइल देयर आर नो न्यू वेज टू डू एनीथिंग. देयर आर न्यू products which you can make, new products which you can sell. Without collateral security, you can only go for the CGTSME scheme available, wherein the loan will be guaranteed by the government under the CGTSME scheme and bank will be financing it. This is very subjective. I again say banks are not very ready or very, we can say not very aggressive towards financing without collateral security. But again, it depends upon the client relations and the banker's targets, whether he is ready to provide loans for that, for loans for the projects. Those companies which are newly formed and have not yet filed balance sheet. I think there is the question has been printed half only with me. Can a newly formed company who doesn't have previous year financial statement apply under the scheme as a project report to be submitted? See, the scheme very specifically says they will analyze your application on various criteria. They are giving markings. So if you are not getting markings in your existing profitability network, it will be necessary for you to provide how you are going to raise fund for the project. For a 100 CR project, at least at initial stage, 25 to 30 CR will be your client's personal investment, and remaining amount will be invested by taking finances from the bank. So the own 25-30 CR, how is going to come? And the marketing plan, you say your company is established only a year back. So whether you have more earlier experience, how you are going to achieve your turnover, that will have to be proved to the ministry once the queries are raised. If you are unable to prove, and then they will not be accepting your applications. It is upon you how you prove. The only existing of the company is not the criteria. We have seen the whole criteria. Just a minute, I will revise the criteria so that financial capacity, relevant experience and technical capacity of the applicant. So here, if we say relevant capacity, relevant experience is not there. Technical capacity of a unit with only 1 year experience cannot be proved. Financial capacity, you will have to prove whether you are having any other companies who will be providing fund for the project. So basically, you will be losing 10 to 15 points if you are not having a track record of your company. How can we derive benefit in textile business through our initiatives in local area network? This question I'm unable to get exactly what is the requirement or what the queries means. My question is, what is the turnover qualification for the scheme, and can I miss the turnover multiple entity or it should be single entity? See, turnover, once your project is approved, turnover will have to be done by the new company established. It has to be done through the entity which is being established under the scheme by utilizing the machinery under the scheme. Job work or trading activity is not allowed. Turnover has to be achieved from your own unit itself. It is only the single entity which will have to achieve the turnover. Multiple entities will not be allowed. Multiple units are allowed, not multiple entities. The company has to be same which has been approved by the Ministry of Textiles for the scheme. Whether present atmospheric condition in western part of India damaged cotton this year very badly, which increased price of raw cotton very dramatically. Whether PLI scheme enough for textile sector? Sir, the earlier part of your question is totally in the not relevant for the subject and is very subjective. Cotton is a natural product, agriculture product. Agriculture, as we know, is an unpredictable industry. From last 1 year, we are seeing that yarn prices have gone skyrocketing. But even at that price, the products are being marketed very well. The fabric is going in the market. The prices are high, but the demand are also high. So at present, the textile industry is not at risk due to the increased cotton prices. But again, it is a demand supply, and I always say to my clients that in textile industry is subject to so many government policies of import, export, and agriculture. So either price increase today will support your demands today or not is not cannot be commented upon. It changes every day. Whether PLI scheme enough for textile sector? No, PLI scheme is not at all enough for textile sector. It is just supporting the two segments of the textile itself. Textile sector has got various other schemes. There is an amended TTDS scheme coming up by the Textile Ministry from 1st of April. Still, it is under discussion. Again, there are state government incentives available for the textile sector. All those have to be clubbed for making the textile sector viable. Unless without that, textile sector viability is never very much assured. Whether we can apply more than one application in one group company for opportunities eligible under the PLI scheme? Yes, you can definitely apply for through one or more companies. It has been specifically permitted in the GR. You can apply from your 2-3 companies. But once the scheme is approved for a company, it has to be implemented through one new company only. Only the implementation will be only through one new company. If in the first year the desired turnover cannot be achieved and subsequent year achieved, then whether the incremental turnover after first year would be above the required turnover prescribed or the actual turnover will be eligible? No, the earlier incentive will be eligible for, but you have to achieve turnover more than what it was required earlier. Plus, if in the first performance you are unable to achieve the 200 or the 600 target, then in the next year you will have to achieve 250 or the second target which we are 250 or just a minute, either 250 or 750 as per your performance year or as per your criteria, you will achieve both the target for getting eligible for the subsidy. Yes, it is possible that in 1 year you cannot achieve the target, but the time period will be only 5 years, and the year in which you are unable to achieve the turnover will the incentive for that year will be lapsed. How is the managerial and development scope in textile industry in India? So far, loan finance is considered. See, financing of the textile industry, I have seen that in the textile clusters and the hubs, the banks are very much positive in financing the textile units. Currently, seeing the share market scenario, also the textile companies are booming. But other than when the textile units are coming up in other than hub areas, in that case, banks are not very keen and they take a lot of time and lot of scrutiny before approving the finances. So it is better to come up with the textile industry in specific textile hubs and not go ahead in the areas where there are no existing textile plants. The queries ask, in terms of paragraph, we wish to know whether the quantum of production of notified products done using second-hand refurbished plant and machinery will be included in threshold increment turnover. No, it has to be through the existing investment which was already proposed by you while making the application. The investment has to come from that machinery only. As per paragraph 2.30, minimum value addition means 60% value addition for integrated fiber. However, independent fabrics 30% vary. Whether the criteria of minimum value addition of 60% or 30% will be calculated on the basis of value of notified products mentioned each individual invoice wise, or would be calculated the whole turnover of the particular notified product for the particular period. They will check it for the particular period. The guidelines are not very clear about this subject, but considering the whole format of the scheme, you are making application after the end of the year. They will see whether you have made a 60% value addition or 30% value addition or not in your application. They will not see whether each transaction the same has been achieved or not. They will make the overall calculation for the minimum value addition subject. But it has to be of notified product only. Professional opportunities available for the chartered accountants. What type of assignments can be taken up and how the time? There are multiple professional opportunities. See, from making application under the PLI scheme, making the project reports for the PLI scheme, certifying the turnover, certifying the value additions, making the application every year. First, you have to make application for approval. Then you have to make application every year for getting the claims under the incentive. This all can be done very effectively by a chartered accountant because of his knowledge. And I think every industry should appoint a chartered accountant for making claims, as a small mistake in calculations can deprive them of the incentive. And chartered accountants are very well experts who can keep the figures good for all the achievement. But also you can advise your clients. Some clients are not aware whether there are such schemes available. You can advise your clients. Sometimes we've seen that a single 100 crore project cannot be put up by the client. Even if he's having that size, a single project is not envisaged in the scheme. You can have 4 projects at various different locations, but it has to come up within the period of 3 years. If that is also possible, then also you can advise your client, okay, you are having some future projects selling in the future products or the ultimate products which they are going to sell. Even if you are now in cotton, say, or if we say you are right now in knitting, but if you want to go for this PLI scheme, you can definitely go. Your existing textile experience will only help you in implementing the project. But whatever the government is going to consider is what you will be producing after getting approval under the scheme. Income tax return from 1819 onwards are not available as the companies use. What to provide? Not available, then not necessary to provide. Ginning pressing will not be covered under the scheme. Ginning pressing is generally a cotton industry concept, and cotton industry is not at all eligible under the scheme. Ginning pressing is totally related to cotton. Some technical products, GST and HSN codes are not given the approved guidelines. In such cases, we can apply with product name. What should we do in such situation where we have multiple products with differential assets under the main product? I'm sorry, I won't be able to comment on it, and definitely we will have to contact the respective authorities to get more highlights on the scheme. As much I know, the government is open about discussions, and many people have put up the queries on the portal, and government is replying to all of them with respect to their queries. Regarding this casual employment, etc., we have to get a clarity from the government while making the application. Is the PLI scheme are available only to newly formed MSME or existing units can also avail benefit of PLI? For application, all are eligible, but once approved, you will have to form a new entity, and the facilities coming up under the scheme will have to be implemented through that new company only. Are there any recurring compliances after taking MSME registration? Example, any annual, quarterly, monthly return by fee? No, there are no annual compliances after taking MSME registration. Are preliminary expenses and pre-operative expenses? They are specifically written, each and everything classified in your capitalized to the machinery in your books of accounts will be considered as an investment. The definition, I will read out the definition of investment. Give me a minute. Machinery. Investment in plant machinery and equipment under these guidelines should include investment of new plant machinery, equipment, associated utilities, tools, dies, molds, fixtures, etc. It shall also include expenditure on packaging, freight, transport, insurance, erection, commissioning, machinery, equipment. Associated utilities would include captive power, effluent treatment plant, essential equipments. Each and everything which is being capitalized to the head plant and machinery will be eligible under the scheme. We are in technical textiles. First, investment could be large size, but due to process automation, difficult to engage more than 500 direct employment. Would like to know definition of direct employees. Direct employee means those are working within your facility, those who are working on your plant. This will be only considered direct employment. Those are on muster. IEM certificate made mandatory even for companies for uploading said certificate. IEM certificate made mandatory even for companies for uploading said certificate. What it means? IEM is Industrial Entrepreneurs Memorandum. You can apply it on the Ministry of Industries website. It is Industrial Entrepreneur Memorandum. HSN code not notified. Can we assume all HSN of sector glass, fiber, and composites will include in final list, or we should proactively approach to? I definitely think that you should proactively approach to MOI if some HSN codes are left out, because if you are expecting that I will make an application under this without HSN code present in the list, it may happen that government may reject because they have come up very specifically with the list. So I definitely have a point that you should approach to MOI for getting clarity on the same. Ministry of Textiles, not MOI. Ministry of Textiles will be there. New company applied company is 100% subsidiary of foreign company. Is it okay if promoter contribution coming from first is applied company and same includes in new company? For foreign direct investment, they have specifically written that the foreign direct investment laws of the FDI norms has to be followed. Foreign non-resident investment in participant company shall be in compliance with the norms delineated under the Consolidated FDI Policy 2020 as amended from time to time. So if the FDI Policy 2020 is followed in your case, then definitely it will be allowed. You will be applicant, but in the new company, investment has to come. A new company has to be formed. Again, I am saying the same thing. New company, applied company is 100% subsidiary of foreign company. It is allowed. Is applicable to investment and same influence in is applicable to investment by putting up new plant. I am unable to get this query. Sir, what is the core relevance of having the session on 24th Jan to explain about the scheme and application? Sir, I regret from my side itself or also from the ICI itself, there has been a delay in conducting this session. Actually, we had planned this the second week of January, when we were expecting some dignitaries from the industry also to join. but we didn't get a reply from the industry dignitaries, so there was a delay in implementing this session. I hope there is an extension of the scheme by the government so that we can have a chance to apply. In which way CA advises their client for 360 degrees perspective about this scheme? See, I can speak from my experience and what I personally do, or I've seen some chartered accountants engage in the textile industry. We can start from application. We are capable of applying. We are capable of replying the queries. We are capable of forming of new companies. Then again, we are capable of finalizing the machinery. A chartered accountant has got a capacity to work as CFO and COO. Right now, so many of chartered accountants are providing the consultancy in and out for setting up of the plant. A chartered accountant can help industry in making the budgeting of the targets, regular monitoring of the targets, and achievement of the targets. This whole thing of the PLI scheme is based on turnovers. So if your client is unable to achieve the turnover, he won't be able to get the incentives. So analyzing each and effort of the client, whether he has achieved a turnover or not, what more efforts which he will have to put to achieve the turnover before the year end, all these things can readily be advised by a chartered accountant. So I think a chartered accountant can well manage the whole scenario rather than just providing the application services. What is the relevance of consumption in inventory register, capital goods, and other aspects in the PLI scheme? They have specifically included the value addition concept and the fixed asset investment concept. There are two criteria. So if you are providing some figures in the balance sheet, they have put up that they can make a cost audit and the accounts audit of the company, and they can come and verify whether the claims put up by you are genuine or some manipulations have been done by you. For that purpose, consumption and inventory registers become very important, because only those are the papers by which the government can come to know whether your figures calculation for the incentive and for achieving the criteria are correct or not. In part 1 and part 2, it's 300 crores and 100 crores. They have just divided the incentives, the size of the project in part 1 and part 2. How the incentive shall be calculated in the PLI scheme? I think I have shown a chart. I will again show the chart of the calculation. Just a minute. Here is a calculation sheet for a 300 crore projects. 600 CR is the minimum threshold limit by which without which the incentive cannot be claimed. The incentive for the first year will be 15%. So 600 into 15%, first year incentive will be 90 CR. Next year, it will be on the increment value. 750 is the minimum threshold which has to be achieved. 150 is the increment. 14% of the increment comes to 21 CR. I hope this thing is clear. In case of 100 crore project, first year 200 into 11%, second year 50 into 10%. This will be the method of calculation of the incentive. Maximum cap. What are general conditions of PLI scheme? I think everything has been covered by me in PPT. If anybody want, Sambit sir, you can share with them the PPT so that they can get reply for this general conditions and selection criteria. Everything is covered under the GR. And I think I have also covered those points. What are the selection criteria applicable to investment by putting up the new plant? Again, are there chances of extension of date of filing the application? I am not very sure. It totally depends upon the number of applications, approved applications, and new funds being approved by the ministry. Thank you. Sambit sir, all the queries are over, I think. If anybody wants to put up any more queries, then they can please come ahead. Sandeep sir, any
Query
more
has
queries?
been posted in the WhatsApp.
Yes, sir, all those queries have been covered by me.
No, right now you just.
Are there, sir, only query, are there any chances of extension of date of filing? Sir, there are no chances.
No, you just see it. Right now I posted another query.
Okay, wait, I will check. General conditions of PLI, what is the maximum cap on incentive, general conditions of pay. The maximum cap on incentive and general conditions, everything has been covered. Selection criteria has been covered. I will share once again. These are the selection criteria in table 3. They are very specifically done. As I said earlier, the GR is very much self-explanative and they have not kept anything hidden over here or anything to be decided by them separately. Everything has been put up and open for the industry to consider before applying. Financial capacity of the applicant, relevant experience and technical capacity of the applicant, location of the manufacturing activity, investment, additional direct employment in the first performance year, and product lines which you are going to manufacture. These are the selection criteria. And general conditions are from date of scheme notification will be the main conditions for understanding are the only two things: turnover and value addition. The rest of the things are just explanatory in themselves and depend upon case to case if somebody wants to update anything more. So any specific like FDI, etc., that will depend upon case to case basis. But general criteria you should understand are only two: achievement of turnover and the threshold investment limit. Anything more, Sandeep, Sambit sir? Is there incentives available for less than 10 crore? Okay, some more queries are coming in now. Is a rope rusty making industry current scheme? Sir, you have to go through the HSN codes. Rope or rusty, I think, is a jute-based industry, which is old traditional industry, and jute is not covered over here. Only man-made fibers are covered. Jute is not a man-made fiber, so I don't think jute, rope or rusty will be covered over here. But if you are having something a technicality involved in that, like the Garware Walrus from Pune is one of the oldest technical textile plant, which is exporting this type of plastic, polyester ropes to throughout the world. If there is something innovative or something technical portion covered, only then the rope racing will be covered. You have to go through the HSN codes in the scheme. Is there any incentive scheme available for less than 10 crores investment? Yes, sir, definitely. You should study the 8 of scheme available in the Ministry Measures of Textiles. But as of now, on 31st March 2022, 8 of scheme they will be closed. Their period is closing on 31st March 22. Government is under having discussion on TTDS scheme for textiles, technology development under textiles. That scheme is still under discussion. PPT is circulating among the industry members for comments. After approval by the Textile Ministry, it has to go to Planning and Commission. And from 1st of April, the new scheme may come or the existing 8F scheme may be extended. As of now, the 8F scheme is available till 31st March 22. Other than this, there are various state schemes. I reside in Maharashtra. I have studied Maharashtra, Gujarat, Madhya Pradesh, Karnataka. Every state is having a very specific scheme for textiles. Those are very much incentivizing for the industry. Selection committee for the PLI scheme. Okay. Secretary Textiles will be the chairman. Additional Secretary Ministry of Textiles member. Additional Secretary Financial Advisor member. representative from Niti Aayog, representative from DPIIT, is Department of Industries, trade advisor, member secretary, and economic advisor member. This will be the composition of the selection committee of the scheme. Conditions for investment in the PLI scheme. Everybody can invest, everybody can apply, but those approved will have to make the threshold capital investment in the scheme. That is 100 CR or 300 CR and achieve the turnover. Only two basic criteria. Associated utilities. Here they are talking about associated utilities, new plant and machinery, equipment, and associated utilities. In textile, when you are going in production say for process, there are boilers, there are effluent treatment plants, there are various such other sorting machines are not required in textile industry anywhere. There are compressors, there are humidification plants required for the textile industry. All these things will be covered under associated utilities, which are not primary plant and machinery of equipment. Those also will be available for plant and machinery. Those will also be covered for the purpose of incentive. Ineligible investment, only land and administrative building will be the ineligible investment. Everything else will be covered for the project.
I will eat. Papa, burger कब बनेगा?
Any more queries from the members?
Is there no more queries?
I think there are no more queries.
Right. So, good evening, everyone. Myself, CA Shreya Jain. I'd like to give the vote of thanks for this amazing session that just happened, and we were the participants. I'd like to thank the committee on MSME and startup. This is the first year of the committee doing such tremendous work, providing such great learning opportunities for all of us. I'd like to thank our guest of honor, CA Mahesh Podarji, for giving us an insight on PLI on textiles. Well, he's quite a known speaker on various platforms for various topics. And today was a delight for all of us for such a lucid presentation and answering all the queries. That's superb. That has been great. I'd like to thank our chairman, CA Dheeraj Khandelwalji, Vice Chairman, CA Pramod Jainji, and the entire secretarial, Sambitji and others for hosting the webinar and giving us this opportunity to be a part and be with the world and know what are the latest things that are coming up things like startup, MSME that we all want to know. So thank you so much for this opportunity. And last but not the least, I would like to thank all the participants for their presence. Thank you so much.
Thank you so much, sir. Thank you so much, ma'am. Now here we conclude the session. Thank you, sir.
Yes, sir, we can conclude, sir.